Good afternoon and welcome to the Wall Street crossover show brought to you in conjunction with Tip TV and Admiral Markets. Darren Sinden here, market commentator at Admiral Markets on my own today. Nick Batsford's been called away on business out of town, so you'll just have to make do with me. For those of you that haven't seen the show before, we try and take a look at the crossover between London and Wall Street trading and look at some of the key points that have happened in the morning session and some of the things that are likely to be influential this afternoon in the US. So without further ado, if we can move on to our first slide, and here we'll take a look at the data released over the European session. Been a fairly busy morning with plenty of data coming out of Europe and the Eurozone as a whole, but I've just picked on three or four main points that took my eye. First of all, starting with German GDP. These were the numbers for Q1 2015. And they were better. They were up 0.3% quarter on quarter and an annual increase of 1.1%. However, that number was somewhat slower than analysts were expecting, and it's somewhat of a disappointment there. Counterbalanced, though, to some extent by the numbers out of France. And we spoke about the French GDP, or the prospects for French GDP growth yesterday after the Bank of France survey, and here French GDP was actually up 0.6% quarter on quarter, and that was well ahead of what had been forecast. Well, it wasn't a happy picture across all of the Eurozone, unfortunately. Finland has slipped back into recession. Q1 2015 GDP here falling by 0.1%. It may not sound like much of a dip, but that was the second negative quarter in a row, and of course that meets the criteria, shall we say, for a technical recession at least. Closer to home then, we had the much anticipated UK inflation report. Mark Carney speaking about the economic prospects for the UK. Perhaps somewhat surprisingly, the Bank of England actually cut its forecast for GDP growth in 2015. Not by too much, but still it was trimmed. They did hint that we won't see a rate rise until Q2 2016. There was also a suggestion, of course, that inflation could yet dip lower from the 0% bound that we saw in March and April, and perhaps go negative in the short term at least. Mark Carney suggested that was possible. So a mixed bag there. Cable took most of that news in its stride, I think it's fair to say. So let's move on now to our second slide. And here we're just going to have a quick look at some of the big movers in the FTSE 100 over the course of this morning. Topping the leaderboard today, Mondi, paper and packaging company, spun out once upon a time from Anglo American. They've come along with some great numbers. Profits rose by 29%. And I think the key here that the market took to heart was the fact that they did so on lower input costs. And it's rare to come across a company that's talking about lower input costs at the moment. They've been marked up substantially, rising by 10.5% on the day. Moving on then to house builder Barratt Developments. Now, we talked about the house builders either side of the recent UK election, and coincidentally Barratt Development were reporting figures today. They were very good numbers, and Barratt was able to report the highest ever level of forward sales for its properties. A very positive conference call, I understand, after the numbers, and the stock is up 4.19%, and I'm sure we'll see a number of further broker upgrades for this stock, which is something of a stock market darling. Going the other way, Compass Group, well known as one of Europe's largest catering organisations. Their numbers were in line, but they were no better than the market had expected, and the management couldn't offer much in the way of positivity. And so the stock has been called down by just under 3%, down 2.95% in the London session so far. So let's move on and have a look at our next slide. And this is where we take a look at M&A rumours and movers, things that are happening both here and possibly in the US. And today we're going to look at a story that actually broke yesterday, which was the bid by Verizon Communications for AOL, as was known as American Online. The bid yesterday, $50.50, a cash offer, $50.50 cash per share for AOL. And AOL finished the day up around 18.62%. That deal valued AOL at $4.4 billion. But I thought we'd just have a brief look at why Verizon have done this and what's behind the move to bid for what perhaps is, most people might think of perhaps as one of yesterday's internet companies. And the deal is driven simply by the mobile advertising markets. That's a market that's worth around $42.6 billion worldwide. currently. Google and Facebook, between them, have around a 55% share. And I think that Verizon was keen to try and get into this market. Now, as I say, the deal valued Verizon at $4.4 billion. Verizon has a market cap of around 203 billion, so it's very much a bite-sized acquisition for Verizon. And what they're hoping to achieve here, I think, is the marriage of Verizon's customer data. Verizon has around 104 million customers, and AOL's expertise in serving mobile ads. And AOL is around the 17th or 18th largest company in this internet provision space, but they obviously own a lot of content in things like Huffington Post, those kind of popular blogs that people more and more are looking on their mobile phones. And so I think Verizon's hoping to take a gamble here, really, in this fast-moving online advertising industry with a relatively low entry price. Could be difficult because the ground's shifting under their feet, but I think given what other people have paid for businesses in this space in the past, they're probably doing a reasonable deal there. So let's have a look now at the data points in the US this afternoon to keep an eye on. Once again, as has been the case for most of this week so far, it's a relatively slow data day from the US. We have got retail sales for April. We've chosen to focus on the April month-on-month figure, less autos, and we're looking here for a positive read, a gain of 0.5% versus a gain of 0.4% in March. So anything above that will obviously be better received. Elsewhere, there's the MBA mortgage applications numbers. They come out weekly. We've seen a sharp variance in recent weeks. We've had a -3 and a +5 and an unchanged read over the last 3 weeks, but we're looking hopefully for a further positive number today. Right, let's move on to our next slide. And our final slide, as ever, US pre-market movers and levels to watch. So I picked out a couple of technology, software and technology stocks to look at today. GoDaddy, which I think most of us will be familiar with from their ads. It seems to be all over the TV these days. They provide web hosting, web creation, website creation services, etc. to small businesses and independent traders. They beat on revenues and they guided higher, but they didn't guide higher enough to please the market. Recently IPO'd this stock. Normally in a US IPO, people are conservative with their estimates, and I think the market was hoping for a bigger beat and better guidance from GoDaddy. So they're down about 1.46, 1.5%, if you like, before trading. And then Hortonworks, which is, for those of you who don't know, is a stock that provides software sales and leasing for big data, and particularly a software suite known as Hadoop. They went the other way. They're up 11.5% pre-market. Q1 earnings per share beat guidance. They were 10% higher on Q2 revenues, or the guidance rather is 10% higher for Q2 revenues, and they announced 200% growth in subscribers year on year, and that's really pleased the market. And as I say, they're called up 11.5% prior to the US Open. And in terms of levels to watch today, if we look at the FTSE, we're watching 68.85 on the downside, 7,025 on the upside. You'll recall that European markets were considerably weaker yesterday. On the DAX, 11,385 is our new downside level, 11,610 the level to watch on the upside, slightly range bound for the moment there, the DAX. The S&P, 2085 is our downside level, 2108 to the upside. For the Dow, 17,953 would be our downside level, and 18,125 the level to watch to the upside. And moving on to the currencies, for euro dollar, we're watching 112 even on the downside and 112.68 to the upside. The Aussie dollar, US dollar, we've moved up our range here, 79.60 on the downside there, and 80.80 our new upside level. Dollar yen just slightly tightening the range from yesterday, 119.68 on the downside versus 120.03 to the upside. And cable holding in there despite that Bank of England growth reduction forecast, and we're looking at 156.40 on the downside and 157.40 on the upside. Thank you for joining us today. As ever, I'll just say what Nick would normally say. If you have got any thoughts, feedback, suggestions in how we can improve the show, please let us know. And I hope to see you here tomorrow again at 1 o'clock.